So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to the Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to the Daily Call. Today we're going to talk about why understanding asset class correlations can help save your butt. So a lot of the stuff that we've been doing recently with our research team and backtesting wise has been in the realm of underlying asset correlations and building uncorrelated baskets of securities. And so what we've been trying to do is not only study the relationship between different industries and ETFs to one another and what their long-term correlations have been or not, but also trying to understand how we can build baskets of option strategies in different ETFs and sectors that have very little to do with one another. So how can we get as much diversification benefit with as little number of tickers in our portfolio as possible? And so I think the key that I want to get across today is not necessarily that you have to memorize every single asset class correlation to another asset class, but it's just that you should understand at least the big ones. So the big asset class correlations to one another: bonds to stocks, stocks to oil, oil to bonds, etc. And you should probably understand anything specifically that you're trading. So if you do a lot of trading in, say, the Euro or Mexico and EWW, you should probably understand what those asset classes correlate to so that you have an idea of if, one ticker goes up, is it likely to make the other ticker, or is the other ticker likely to react in the same direction, no direction at all, or potentially the opposite direction? So here's a couple here that I think will just kind of help and kind of lead you down this path of hopefully discovering a little bit more about this. One of the ones that we like to track a lot is bonds. And so we like to track bonds, which is typically TLT is a great bond ETF that tracks long-term maturity bonds, very highly liquid. What most people would believe is that bonds are inversely correlated to stocks. So when stock prices go up, bond prices should go down. That's not actually the case. And we actually found this, and actually other people have found this before, but we reconfirmed this, that bonds are actually very highly correlated with stocks. When we track the correlation between the bonds, TLT, and something like SPY, we actually get a correlation of 0.63, which means that typically when stocks go up or when bonds go up, they actually go up more often than not together, which is completely backwards from what traditional investing would say. You've often heard even the 60-40 portfolio, so that you diversify out. But how much diversity are you really getting with bonds? Because they end up actually tracking very much in line with stocks. Now, another one that you can look at is potentially the Euro and bonds. So if we want potential exposure, or we want to trade exposure to the Euro through something like FXE, we could look at the exposure and the correlation between FXE and TLT. And we actually see that the Euro is highly negatively correlated with bonds. So when bonds are moving higher, we would expect that the Euro is actually moving lower, and their negative correlation is negative 0.79. So pretty extreme correlation to the opposite end. So if, again, bonds are moving higher, the Euro potentially is moving lower. If the Euro is moving higher, then bonds are moving lower. This is, again, not to say that this leads us into making a trade in either direction, but just understanding that these two things might actually move in opposite directions. So if we do see them move together, maybe that's a trading opportunity, that they're, kind of breaking this correlation short term, and then maybe it might react and move in totally opposite directions moving forward. So hopefully this helps out. Again, we publish a lot of this stuff inside of our Pro and Elite membership. So if you want charts and graphs on all these different correlations, we definitely send them to all of our Pro and Elite members. So as always, if you have any questions, let me know. And until next time, happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.